What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is June 3rd of 2024. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I not only want to spend some time to do some time-sensitive updates on our thoughts around Bitcoin and altcoin prices going into the next couple of days and weeks, but beyond that as well, I want to spend some time to talk about a potential theory that we may be very well near our potential blow-off top in asset prices, especially when it comes to equities in the stock market. There is a near 100-year long chart that is held true and consistent, and I think that we're getting very close to a potential top according to that chart. So I want to spend some time to talk about what that means for stocks, but also cryptocurrencies as well, and also where we're looking at things in the short term. If you happen to enjoy this video, consider dropping a like. It's a great way to support the channel, and let's go ahead and dive into the conversation. Now, I want to emphasize something here today, guys, before we discuss anything. I want to talk about how, even though in the short term, we may be entering into this kind of finishing move here. We can make a lot of great money. There will be some excessive risk taking, as there tends to be in blow-off tops or cycle tops. But beyond that as well, I want to really try to set the tone for the long-term picture. I did a video previously back last Monday that was a bit different from a normal analysis, where I just talked one-on-one, and I really hinted towards this narrative that I think we're getting towards really the later stages here, both for crypto as a market when it comes to those life-changing returns you can make, but beyond that as well, asset prices as a whole, I think across the board, are really getting towards an overinflated level. And I'll talk a little bit about that as we dive through the charts here. Nonetheless, here, I want to go ahead and do some short-term analysis here and talk about what's important to watch for here for Bitcoin. We've consolidated for nearly 3 months here. In fact, this is the longest period of time. Let me emphasize this again, the longest period of time by a long shot that we have spent around the prior range of the prior all-time highs of the last cycle. Now, I know some people will argue to some extent that, that we are at slightly higher prices, no doubt about that, but the majority of the trending range here from around 60K to 75K, most of that has been spent at a near similar price range to the highs of the past. So this is very imperative stuff to understand when it comes to setting our expectations for how high the number can really go, all right? And this is something we talked about in this month's Dash report, where we not only set out our kind of price targets for Bitcoin and where we see things going, but more importantly, the overall macro analysis of trying to determine whether or not Bitcoin has the steam to continue here on out. And I think above all, there's a lot of different values that we watch for that help in making the decision-making process. But today I want to focus in on the critical of price action, the critical factor here where price is really going to give us the key signs. Above all here, there are a few key things that I want you guys to keep on your radar here. I want you to keep in mind the general range of resistance here, the sloping line of resistance, and a need to be able to clear a nice daily close above a big even level, which is $72,000. Each and every time we have come up to test this range here, we have gotten faded, and this is a clear level in which I would like to see that daily close, a nice solid bounce of the 21-day, which we might be seeing right here. That would be in favor of the bulls here, getting a nice blow off top, a nice move here, where Bitcoin can really start to accelerate, ETF flows might start to follow, and other key metrics might as well. So that's what I'll be really watching for here for the bull case scenario. However, a break below this general range here, where we've been trending for the past couple days, where we get a clear daily close below the 21-day, is going to be my signal here. A nice solid multi-single digit red day here is going to really be my cue here that we're heading definitely lower in prices, not only to the lower band of the 100-day, but also coming down here to the 200-day, and potentially even deviating a little bit below that range to potentially test this range of liquidity back here in February. That's what I would generally say is the more likely scenario. But again, if we start to see the broader move in asset prices, and particularly in equities, as we're going to talk about later, then Bitcoin may take the more optimistic route here. Above all, I'm not trying to pick sides here. I'm not trying to sit here and try to make a trade before we get confirmation, so we can actually enjoy the broader range of the move and take a little risk initially. I want to have those confirmation signs before I take any significant risk. The same goes here for total market cap. Again, for the overall market is holding up actually quite nicely here. It's pretty much just a couple, $200 billion short from the prior high range back here. To put that in perspective, we're just down about 7.9% from the all-time highs for market cap for the broader crypto space, and that has been mainly due to the rebound in Ethereum. We were in a much worse position here beforehand. The other coins in the altcoin space are still pretty bad at the moment, as we'll take a look in a moment. But we can see that because of the recovery in Ethereum's price due to the announcement of the Ethereum ETFs, this has brought some short-term kind of relief to the markets. It helped bolster total market cap up by 9% in a single day, or $214 billion. So that's played a big role in this and has gotten us back to where we are resting on support of the 21-day. I like to see that. That's generally a initial stage step for bullishness, but at the same time, we need to be able to hold that and be able to start clearing through some of these prior resistance ranges. If we keep getting shot here, this is just going to be another opportunity for distribution and sell side pressure from large whales and holders over the last decade in plays like Ethereum. So just keep that in mind here, right? It's imperative to understand here that while we've got those first initial signs, I like seeing that hold in the 21-day, right? Not coming down in the 100-day, not coming down in the 200-day just yet. At the same time, though, we need to be vigilant and make sure we actually get some serious movement here that showcases that there's going to be the actual market order flow to drive prices higher, right? Outside of this as well, when it comes to others market cap, right? The broader altcoin space, not looking too hot now. And this is where really, for me personally, I find the value. I really get optimistic about trading in crypto nowadays if I'm seeing other coins start to do well here. Because for me personally, this is where the real gains can be made. If other coins recover back to their prior highs, right, in the event that Bitcoin clears through its prior highs and continues higher, that's going to be at a minimum towards the prior highs of the past, a 30% move, and is likely going to be something much larger here, giving us an opportunity through meme coins, Bitcoin-related infrastructure, DePIN plays, and AI-related plays. All these key narratives, you don't even have to hit it right on the money and get the best play. You're going to be able to make much better returns, and likely in the event of potential altcoin cycle going to that blow off top. So again, this for me is where the bullish case gets more exciting, but the price action is not showing up yet. And as we emphasized again here, to get this kind of 50% correction, I think is definitely going to be the more healthier play long term. A solid mid-cycle correction from 365 billion down here to 180 billion is where I'd really find the value. Somewhere in that pocket between the 200-day and the 200-week around here, this $200 billion range. I think that's going to be a big psychological range, especially in the event of a Bitcoin correction where people would really start scooping up a lot of altcoins, and people would be able to really find some solid discounts on the key strong narratives for a final move in altcoins. And during that period of time, I'm going to be watching for a lot of the other plays out there outside of the ones that are already kind of actively trading in the market. I'm going to be obviously watching the market pairs that are showcasing strength, but I'm also going to be watching a lot of the emerging ecosystem plays. To let you guys know about some of our partners here on the channel, we have on Angel Block here the raise for Delta Prime. So as you guys know, Angel Block is one of our partners. They're one of the main launch pads or fundraising platforms in the crypto space that's bringing some of the best quality projects out there. And we can see that with Delta Prime, they've already within a matter of just a few days raised over half of their expected raise here. This has been one of the most oversubscribed projects that's currently raising the crypto space. In fact, they just got the biggest grant from Arbitrum. It was like a couple 100,000 Arbitrum tokens. So this is really telling here that this is one of the definitely solid developing projects in the overall Arbitrum ecosystem, one of the hot L2s in the market. But outside of that as well, you see a lot of new DeFi protocols finally starting to pop up like Delta Prime that actually have some real value proposition and are building things that we haven't seen in the DeFi ecosystem before. I like seeing this kind of respark of innovation in DeFi, some of these projects finally getting their moment in the spotlight. And I definitely recommend, whether you decide to participate in the raise or not, you guys take some time to take a look at the Delta Prime. I think it's a really interesting project and one of the really cool plays that could start to give you more opportunity in the crypto space versus just focusing on spot. Outside of that as well, I wanted to talk a little bit about Olive Zero. As you all know, Olive Zero is another one of our partners here on the channel. They've been making some big waves here when it comes to finally rolling out some of the major projects onto their mainnet. This is, again, one of the projects, if you're focused on privacy preserving L1 infrastructure, it's a huge narrative for me personally. I think privacy will make a comeback, but not in the way that most people think, not private peer-to-peer digital cash, but rather privacy preserving L2, layer 1 or layer 2 infrastructure that will allow for people to deploy modular applications while also still having privacy layers baked in. Common is one of the major AMMs when it comes to the Olive Zero ecosystem. And as we discussed back a few videos ago, they are going through one of their initial drops that's going to be one of the initial season drops that's going to allow you to be able to provide liquidity and participate early on, and being able to eventually claim CMN tokens, the native token for the protocol. This is the major AMM for the Alzero ecosystem. So again, my recommendation here above all, guys, is not just to focus on looking for the discounted charts. We're going to be bringing some of those to you guys here over the next couple of videos. I know Russ is also watching some plays as well, but outside of looking for plays that are, pretty ample discount, but are still showcasing that strength, they're above the 21-day, they're charging forward, they're the market leaders by their performance, I also recommend watching for these early stage plays where you can really participate early on in some emerging projects, or be able to participate early on in the raises before the projects really hit the big exchanges, right? Some of these opportunities have really started to present themselves in the crypto space, and it's time to really take definitely a fair look and to see whether or not those opportunities make sense for you. But above all here, when it comes to others market cap, guys, the biggest thing above all for price action is getting above that 21-day, getting above the 100-day. I don't like seeing the 100-day mingling with the 21-day here. That's not a good sign of confidence so far, but that can start to change. And I think the level that you're looking for here is a clear daily close, and I would get more confident here on a weekly close when we get above this $300 billion market cap range. This is what I'll be watching for here when it comes to the broader altcoin space. A clear breakaway, a daily, if not weekly close above that $300 billion range, which is not only prior support in the past, but it has been serving as consistent resistance time and time again. A clear breakaway from that 21-day moving average, the 100-day, to showcase that we've got the momentum. That's going to be my cue to start taking risk again. And knowing exactly when to get in the market and when to get out is much more important than getting the absolute right plays, right? We definitely want to focus on market leaders and strong narratives, but it's about making sure to capitalize on the broader move here of a potential blow off top in altcoins. And not to mention, when compared to, say, Bitcoin, which has already set in new all-time highs in this cycle, we have yet to really do so in altcoins. So we've still got some solid room here to grow in the event that we do get that risk-taking in the broader markets. But I want to go ahead here, guys, and talk about the more imperative topic here. I want to talk about the S&P 500. Now, what I'm about to show you guys here today, I'm someone who, as someone who's traded over the last more than a decade, over the last 12, 13 years, started back, that's over 13 years, wow. I started back in 2011. I'm someone who really loves long-term charts. I love trying to find long-term trends, significant points for price, and this has got to be one of the most significant charts I think I've seen in a long time. It's one that I've known about, but when I come to revisit it, I'm reminded of the historic significance of this chart. Now, I want to make it very clear here that I'm not going to speak in absolutes. I'm not here today to tell you guys that this chart is a guarantee of anything, but it definitely speaks significant volume to long-term moves in equities, and helps us to set some realistic expectations for where things are likely going here over the next couple of weeks and months. Because this chart here has been true. The lines we are going to be discussing today, both resistance and support, have held out since the peak of the Roaring 20s back in 1929, almost coming up on 100 years. Wow. So we're talking about a 95-year-old chart here, give or take, right? And what we can see here very clearly is that similar to the Roaring 20s, to the dot-com bubble, equities have pressed very close to the high end here. We also saw a tap of this level in October 2021, and this was where essentially we saw, it was actually more in November and December when we retested that level, but essentially that was where we set in our COVID rally highs back during that period of time. And now it's looking very clearly like this quarter, we've got an opportunity here by the end of June or potentially in July to come up over the next couple of weeks and test that level again. And while I understand some people may say there's a chance that we break through this, I have no doubt that there is a potential opportunity for that to happen. This would be a first in over 95 years. And after many significant retests during kind of euphoric bubbles and periods like we're living in now, where there's still so much excess money, albeit it's not growing. The M2 supply is still well elevated above the normalized ascension and rise over time, right? Even though we've been neutral for the last few years, since really 2022 at M2, we've still got so much money in the system. And now with the mixture of the AI narrative leading a lot of the FANG stocks and the overly bloated multi-trillion-dollar technology companies like Microsoft and Apple, and now NVIDIA coming into the mix with the AI narrative, we've got a lot of froth in valuation in the market that is betting on future expectations of growth, future acceleration in technology and innovation and productivity boost, and that has led equity prices back up towards this higher band. And I think, to be honest, if we're really being honest with ourselves, guys, we've got some signs here, similar back to 2021, similar back to the dot-com bubble, and similar back to 1929, that equities very well may be due for a healthy correction in the near term, that we may be overbought here. NVIDIA is coming in alignment with its prior lines of resistance from back here in 2018. The significant point in October 2021, it has made a 964% move off of the lows from the prior high back here. It has gone up over 250% from its previous highs back in 2021. Right? Now, of course, NVIDIA's financials rightfully have increased during that period of time. And obviously, NVIDIA has got the leading position so far, almost a near monopoly on the GPU market for AI, about 80% market share. But this is likely to change over time. There will be other competitors that come to the forefront. There will be other chip makers. AMD just announced this morning that over the next year or two, they'll be rolling out a key lineup of AI-related chips. You've got Qualcomm, you've got Micron, you've got all types of different companies out there that are building different types, not even to mention Apple, and a lot of companies that originally didn't make their own GPUs or CPUs, now making their own processors for AI. So I want to make it very clear that NVIDIA is not going to always be the only horse in the show, so to speak. They are not always going to be the fastest horse in the race. And because of that, it is high time to start considering that we may be overbought here in the near term. And the last few trading days here, after these multiple gaps up, I think are potentially an indication of that we might start seeing some stalling in price, seeing some of these gaps get filled, and a more healthier correction over the next couple of months. We've got Ozempic as well. Not just NVIDIA has gone out and added hundreds of billions, in this case, actually NVIDIA, they've added like a trillion and a half, in their market valuation just, I think, in the past couple of months. But beyond that as well, Eli Lilly, one of the Ozempic companies, right, has been able to expand. And really from a year out from where we were back this time around last year, we've gone and pretty much seen a near doubling in the share price for Eli Lilly. Hundreds of billions of dollars here, I think from around $400 billion market cap up to like 800 something billion dollars. This to me, as you can see, the momentum building up here, really since back in 2018, is building up even on the logarithmic scale in a parabolic fashion. I'm not even looking here in the regular chart. This is the logarithmic chart here, right? So we're really seeing a near kind of parabolic move here off of the hope and optimism that Ozempic is going to be this continue to be this miracle drug where people are losing large amounts of weight. And at the end of the day, I don't have an entirely negative opinion on Ozempic. I think that, as with a lot of medications, there will be more negative side effects that come out over time. That's kind of a given with medication, but at the end of the day, I'm not here to doubt that Ozempic is going to be a pretty big game changer here. Peptide-based medication is quite interesting, and it could be a helpful tool for people. I'm not here to debate that. I'm here to debate the fact that markets right now are pricing Eli Lilly at the moment at a 122 PE multiple. Right? Now, I understand the forward PE multiple might look a little bit better, but again, these are, the markets getting to a degree where they are pricing future expectations of growth. They're pricing in that things are going to keep accelerating here. And it's been that way for a while, and it's justifiably understandable to an extent, as with all market peaks, why people believe it's just going to keep going up, because that system has been working for the near term. So again, I really think that there's a chance maybe we see a further acceleration here in NVIDIA and Eli Lilly in the short term. I'm watching as well some of the more smaller cap plays like Palantir that really have that multiple potential in the short term. But the big thing above all is I come here to the S&P 500. When I see these kind of buys on the dip here, the 21-day, right, very close here to that line of resistance from back in 1929. I think there's a good chance you come up and test that range here. There could be some great short-term trades here, a lot of great risk-taking, a lot of volatility. But after that, as we get closer and closer to that level, guys, I'd be very quick to take profits and be in cash for a while. A lot of people are getting overly euphoric here at this point. Right? And I just take it here to this chart, right? To be honest with you guys, again, taking a reflection back on 2023, no doubt about it, like, we didn't make much trades in 2023. We missed some great opportunities, but I'm not here to get caught 2 steps behind, and I'm not going to ignore the historic significance of a chart that has held up for 95 years on one of the core indices for equities. And if stocks, particularly US stocks, start to correct heavily, I can almost guarantee you guys that you are not only going to see a broader correction in other stocks across the world, in Europe, Asia, but along with that as well, you are going to see corrective forces when it comes to digital assets like Bitcoin, like Ethereum. It's not going to matter if you have the ETFs. Investor sentiment is going to be shot. Inflows are going to die out. People are going to be reserving back into cash into anywhere where they can get some kind of protective yield, and they're going to be waiting for better entries. That's the key point here that I want you guys to keep in mind here when it comes to expectations. We are seeing the same kind of euphoric things going on that we see during peaks. We see GME, popping off here as well, with Roaring Kitty, the DFV, I'm not going to say the name here, but essentially DFV, the guy from the GameStop craze, going in supposedly with a $65 million GME call position. So, look, guys, again, at the end of the day, there's money to be made in the short term. There's fun euphoric periods. We made great money in Q1 trading on some of the meme coins. I have no doubt there could be an opportune setup here, whether it's here in the next couple of weeks or we get the more extensive correction and then we rebound higher, similar back into 2021. We had a harsh 50% correction. We came back up. There was money to be made on both rallies. I don't know what that market structure is going to look like. We have to wait and see how Bitcoin is going to play out over the next couple of days. We're really at that kind of make or break moment here where it's either going to happen here soon or we're going to have that corrective move and potentially a setup later on into the later part of 2024 going into the election year. But I think that right now, if you're just asking me about like, Nick, should I buy Bitcoin or crypto for the next year or two? I wouldn't touch it with a 10-foot pole. And if you guys need further confirmation of that, again, I highly recommend you guys check out the dashboard, check out that article. This is one of the most extensive ones I've written in a while when it comes to the crypto market. We cover other macro topics as well. The dashboard covers a whole range of different topics. We cover crypto, stocks, commodities, forex markets, and we offer a whole range of different services. We not only obviously do a 20-page plus report, I think this one was nearly 30 pages, where we dove into the markets. We had some altcoin setups this month, as well as stock setups that we're watching for. But beyond that, you've also got some of our key momentum indicators that you guys get access to. You'll be able to get access to our mid-month webinars where you guys can ask me questions. We can dive into a whole range of different topics. And beyond that as well, you can also get access towards a whole range of features when it comes to being able to access the dashboard discussion group, being able to get the alerts group, so much more. So if you guys are interested in that, feel free to check it out down below in the description. But that's it for today's video. Hope you guys have a fantastic one wherever you are. I'll see you guys in the next video. Take care, everyone.